I told you exactly where this stock was going to bottom, exactly where the reversal would trigger, and frame by frame, the market proved me right. Welcome back to Smart Stock Sam, the channel where we do not guess, we analyze, we track, and we execute. Today we are talking about Rezolve AI, ticker RZLV, and if you clicked on this video wondering whether the rebound is real and where this stock is heading next, you are in exactly the right place. Because today I am walking you through the full picture, why the bottom is confirmed, why the biggest names on Wall Street are quietly loading up, and why there is a very specific price target forming right now that most retail investors are completely blind to. Stay locked in, because we are just getting started. Let me start with what happened, because I need you to understand just how precise this setup was. Back on February 23rd, I told you the strategic entry zone was between $2.09 and $2.12. I said $2.02 was the absolute floor, the line in the sand that could not be broken. So what did the market do? On February 23rd, the actual low hit $2.05. It dipped right into the buy pocket we identified and bounced hard. That $2.02 floor was never touched, not even close. This was not luck. This was not a guess. This was high-conviction technical analysis meeting market reality in real time, and if you followed that entry, you are sitting in profit right now. That is what Smart Stock Sam is about. But finding the bottom is only half the story. The real confirmation came on February 24th when the stock needed to break above $2.30 to validate the trend shift. What happened? RZLV surged 9.5% in a single session, closing at $2.36. Since then, we have cleared moving average targets at $2.20 and $2.28. As of our most recent close, this stock is sitting at $2.48. The coiled spring behavior we outlined in advance? It is not a theory anymore. It is actively playing out in real time. Now you have to ask yourself, if the prediction was this accurate on the way down and on the reversal, what does that tell you about where this stock could be heading next? To understand that, you need to understand the three pillars holding up this entire bull case: technical validation, a massive fundamental shift, and what I am calling the squeeze setup. Let me break each one down for you. Start with the technicals. The bottom is confirmed. We held the floor, we triggered the reversal exactly where the data said we would, and we have now turned old resistance into new support. On February 27th, we consolidated right above that $2.30 validation level. Then on Monday, March 2nd, RZLV ignored broader market jitters and surged 6.44% to close at $2.48, even peaking at $2.52 during the session. Technical sentiment has officially shifted to a strong buy on both the hourly and the 5-hour timeframes. The latter is clear. Support sits at $2.28 to $2.30. A clean break above $2.53 confirms the bull continuation and opens the road to $2.76. Now let us talk about the fundamental shift, because this is where the story gets really interesting. While retail investors were panic selling last week, something else was happening underneath the surface. Citadel advisors liquidated roughly 90% of their stake in RZLV. Now, to the average retail trader, that looks like a red flag. But to anyone who has been around the markets long enough, that is called a liquidity vacuum. And liquidity vacuums do not stay empty for long, because while Citadel stepped out, the heavyweights stepped in. Goldman Sachs did not just dip their toe in the water. They increased their position by an explosive 340%. State Street and Geode Capital are also aggressively accumulating. Jump Financial took a brand new position of 1.75 million shares. Davidson Kempner added 1.2 million shares. Total institutional ownership has now climbed to nearly 27.96%. Think about what that means. The most sophisticated money managers on the planet are not building positions this size because they think this stock is going sideways. They are positioning ahead of something. And if Wall Street is quietly loading up while retail is panicking, who do you think is going to be right? That brings us to the fundamental catalyst that is changing everything. the deal that most people scrolled past without realizing what it actually means for this company's future. The reward loyalty acquisition. This is a $230 million deal that completely transforms the DNA of Rezolve AI. It is expected to add $90 million in annual revenue, and more importantly, it gives RZLV instant access to 100 million cardholders through Tier 1 banking partnerships with names like Barclays and HSBC. This is not a small bolt-on deal. This is a fundamental re-rating event, and Wall Street knows it. The analyst consensus right now has an average price target between $11 and $11.25. The high end has Maxim Group at $15, IA Financial at $14, and Alliance Global Partners at $13. From a current price of roughly $2.48, we are talking about 400% plus upside according to Wall Street's own models. Now, does that mean we are sprinting to $15 tomorrow? No. But what it does tell you is that the gap between where this stock is trading and where analysts believe it should trade is enormous. On top of that, the risk profile has materially improved. RZLV reached operational profitability in December 2025 and is on track for full-year profitability this year. That effectively removes the threat of immediate shareholder dilution, one of the biggest overhangs that was keeping this stock suppressed for months while everyone else was looking the other way. And CEO Dan Wagner, divesting his personal stake, has resolved the governance concerns that were creating a cloud over the company. The baggage is gone. The path is clear. And when a company removes two major overhangs at the same time that institutional money is flooding in, that combination tends to produce a very specific kind of price reaction. Now here is where it gets explosive. Let us talk about the squeeze setup. Because even if you set aside every single fundamental catalyst I just described, the technical picture alone creates a very specific and very powerful setup. Right now, 35.9 million shares are short on RZLV, representing nearly 14% of the float. The days to cover ratio sits at 3.64. On March 2nd alone, the off-exchange short volume ratio spiked to over 54%. What does that mean in plain English? The shorts are trapped, and the options market is making it worse for them. There is a massive concentration of call options sitting at the $2.50 strike. If RZLV clears $2.60, market makers will be forced to buy the underlying stock to hedge their own positions. That buying creates more buying, which creates more momentum, which creates a feedback loop. That feedback loop has a target. Analysts and the options chain are both pointing toward $3 as the psychological level and $3.50 as the point where the gamma magnet is at its strongest. Could the shorts cover before that happens? Sure. Is there any chance the stock simply drifts sideways while the setup unwinds quietly? Technically, yes. But with 35.9 million shares short, a catalytic acquisition closing in the background, institutional names continuing to accumulate, and a stock that has already proved it can surge 9.5% in a single session. What do you think the path of least resistance actually is? For this week specifically, here is the playbook. Your strategic entry zone is $2.30 to $2.40. We want to see a structural retest of that 50-day moving average. If the price pulls back into that green zone, it is a high conviction support entry before the next leg higher. Do not chase the green candles. Wait for the retest, build the position, and let the setup work. Your first major upside target is $2.53. A clean break there, and we are talking about a continuation toward $2.76. Above that, the $3 level becomes the next magnet. Before I give you my final take, I need to be transparent with you. Everything discussed in this video is for educational and informational purposes only. I am not a licensed financial advisor. Nothing here constitutes personalized investment advice. Investing in small cap and speculative stocks like RZLV carries significant risk, including the risk of losing your entire investment. Always do your own research, consult with a qualified financial professional, and never invest more than you can afford to lose. Short squeeze setups and analyst price targets do not guarantee outcomes. They represent probabilities and possibilities, not certainties. Trade responsibly. Now, the final verdict. RZLV has confirmed its bottom, validated the reversal, and is now building momentum on the back of institutional accumulation, a transformative acquisition, improving fundamentals, and a tightly wound short squeeze setup. This is one of the most asymmetric risk-reward setups I have seen in this space in a long time. The roadmap is set, the smart money is positioned, the technicals are aligned. The only question now is whether the market is going to follow the setup, and everything we know about how these mechanics work says it will. Here is my question for you in the comments. Do you think RZLV clears $2.53 this week, or do we see one more retest of support before the next leg up? Drop your answer below. I read every single comment, and I want to know where you think this goes. If this breakdown gave you value, smash that like button. It genuinely helps this channel reach more investors who need this kind of analysis. And if you are not subscribed to Smart Stocks Sam yet, what are you waiting for? Hit subscribe and turn on notifications so you never miss a setup like this one. I will see you in the next video.